Hey everyone, welcome back to the channel where we break down stocks with real depth and honest takes. Today we're diving into Simply Good Foods, ticker SMPL, a packaged foods name that's been through the ringer lately but just posted some surprisingly solid numbers. Let's get straight into it. Simply Good Foods operates in the consumer defensive space with a portfolio centered on better-for-you snacks and nutrition bars. The company has faced meaningful headwinds from shifting consumer habits, especially around weight loss drugs, yet it continues to generate strong cash flow and maintains a clean balance sheet that gives it options. At its core, Simply Good Foods owns well-known brands like Quest, Atkins, and OWYN. Quest focuses on high-protein, low-sugar bars and snacks that appeal to fitness enthusiasts, while Atkins targets the low-carb crowd. OWYN adds a plant-based protein angle. The business sells through traditional retail, e-commerce, and direct-to-consumer channels, with the vast majority of sales still coming from North America. Management has been repositioning Atkins as more of a complement to GLP-1 medications rather than a direct competitor, which is a smart strategic shift given the category pressures. Looking at the revenue picture, the company generated about $1.45 billion in sales for fiscal 2025, with the overwhelming majority coming from North America. International remains a small slice at roughly $29 million. Product-wise, shipping and handling fees alone contributed over $100 million, underscoring how much volume moves through their distribution network. Growth has been modest but steady over the past several years as they integrate acquisitions and expand shelf space. On the earnings front, the third quarter of fiscal 2026 delivered a clear beat. EPS came in at 42 cents versus the 35-cent consensus, and revenue reached $357 million against expectations around $333 million. That said, the year-over-year comparison shows some compression, with prior year EPS at 51 cents. Margins remain respectable in the low 30s on a gross basis, though net profitability has fluctuated with integration costs and marketing investments. The beat shows the business can still deliver when execution is tight. From the latest earnings call, management highlighted continued strength in Quest while acknowledging slower velocity in Atkins and OWYN. They emphasized cost discipline, ongoing share repurchases, and a more measured approach to distribution expansion after earlier overreach created some inventory and velocity issues. The tone was pragmatic rather than overly bullish, with clear recognition that GLP-1 drugs are reshaping demand patterns in the weight management category. They also pointed to pricing adjustments and innovation pipelines as levers to stabilize sales trends going forward. Turning to the balance sheet and cash flow, the company carries manageable leverage with debt-to-equity around 0.27 and a current ratio above 5, giving it plenty of liquidity. Free cash flow has been robust, often exceeding $150 million annually in recent years, which supports both buybacks and any tuck-in opportunities. Operating cash flow remains healthy even as net income has moderated, reflecting solid working capital management and the asset-light nature of much of the business. On valuation, the stock is trading around $13, while our model puts fair value somewhere in the mid to high teens, closer to $17. That implies a potential gap of roughly 30%. Though we have to remember, these are estimates that can shift with growth assumptions or discount rates. The forward multiple sits in the mid-single digits, which looks cheap on the surface, but reflects the real concerns around category demand and brand relevance. If the company can stabilize top-line trends and sustain strong free cash flow conversion, the setup could offer attractive returns from here. Strengths include a strong cash generation profile, clean balance sheet, and recognizable brands with loyal followings. Weaknesses center on slowing sales velocity in key lines and past distribution missteps that hurt margins. Opportunities lie in product innovation around GLP-1 friendly positioning and potential international expansion. Threats include continued GLP-1 adoption, private label competition, and any renewed regulatory scrutiny around health claims. Over the past year, the shares have fallen more than 60%, with a particularly sharp drop after expansion issues surfaced earlier in the summer. The 3-month performance has turned positive, up around 22%, suggesting the market is starting to price in the better-than-feared earnings. Longer-term holders have seen significant drawdowns, with 5-year returns also deeply negative. Wrapping up, Simply Good Foods is a business that still prints cash and sits at an attractive valuation after the sell-off, but the fundamental challenges around brand relevance and category shifts are real. It could be worth watching for signs that the repositioning efforts are gaining traction. As always, do your own research and consider your risk tolerance before making any moves. Thanks for tuning in, and I'll catch you in the next one.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.